How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Australian dollar versus Japanese yen. I wanted to get it out of the way early so I didn't miss the actual day itself, and then the next daily candle forms. I've been pretty late with it because I've been busy. Schedule has changed. So what really has changed is that price from the last episode, price came up and took out that swing high. So we spoke about that in the last episode. We said that most likely price is going to get to this swing high, and it did during one of the kill zones, whether that was London or New York. We can also see after breaking this swing high, we have now taken the stance of bullish momentum. Bullish momentum is me seeing a swing high being broken on the daily time frame, or even weekly or monthly. But since I like to track it on the daily because it's a day-to-day price action tracking, it's easy to see a lot of these details here. Price is running up higher, taking out a swing high. We're going to see some type of higher swing low form. Higher swing low form in the near future. Now, where does it form? I don't know. I'm not trying to predict that. Unless we get a fair value gap or some short, then we could possibly say, okay, that swing low is going to form inside that fair value gap that's going up, or the busy going up, buy side imbalance, sell side inefficiency. We can take a educated guess that the higher swing low would form inside the fair value gap and then push price higher. However, we could get price just going, hyperbolic and just going up, giving up days from here on. It could just be up, 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 all the way up. Within that, we could also see counter trend candles. So there might be days where the candle closes down. Let's say it's on a Monday, and the ideal trading day is a Tuesday or Wednesday, Thursday. You buy after the down day going into a Tuesday, or you buy after a down day on Tuesday going into a Wednesday, or you buy after a down day on Wednesday going into Thursday. I personally don't like to trade Mondays and Fridays because it's the beginning of the week. That normally flushes out a lot of retail traders. At the end of the week, a lot of retail traders also get flushed into the wrong side as well. But with what we see here, it also occurred on other yen crosses. So let's take a look at some other yen crosses today. Look at NJ pushing up, still going higher, taking out what? Swing highs. So eventually as well, you're going to see the same thing. Some type of higher swing low is going to form. And we could probably take an educated guess that that higher swing low would form somewhere inside this fair value gap here. Price going up, coming down, rebalancing it, creating the higher swing low somewhere in this range, and then going higher. Doesn't mean it has to form exactly inside the range, but within this general area. Let's take a look at another yen cross today. CAD flying. All right, couple hours ago when we looked at it, it wasn't this large. Look how large the candle is. Large range cycle. Picking up speed now. Commercials are really supporting this to go higher. We just broke this swing high up here. Buy side liquidity. Buy side liquidity. Buy side liquidity. Double tops, I believe. Yeah, double tops. No, they're not double tops. This is the swing point here. Buy side, buy side, buy side. This is bullish. You can see, look at the structure. There's nowhere that this is showing itself that it's going to be bearish. At points of rating buy side liquidity, could the speculation of bearishness come into play? Yes, because we can have false breaks. Price can easily break these highs, and then the trend can change at this point. And then it could go into a bearish trend and trade lower. Let's look at another pair. Let's look at EJ, if it would load. EJ going up, right? We talked about how the yen crosses were making that false break. And then price moving back up, taking out swing highs. Because if it takes out a swing low, it should most likely print a lower swing high and continue trading lower. It took out this swing low and didn't create a lower swing high that continued the trend lower. It continued to go higher, changing the stance, changing the direction, breaking a swing high, and now going back up higher. So swing high here. Let me make sure that's correct. No, the swing high is here, unless they're double tops. No, this is the swing high. Okay. So that's the swing high here. It's been rated. Price is going up. Now, I know we're only tracking AJ, but it's really crucial to look at these correlations because of the yen crosses. They are really tricky pairs to trade. But in its recent time and the fundamentals that we have, right, the macro and data that we have, the interest rates are drastically huge in its interest rate differentials. All the other central banks have a larger interest rate than BOJ, Bank of Japan. So take advantage of this because sooner or later, the Bank of Japan will move out of a negative rate and leave a negative policy in the past. Just like all the other central banks, they're looking to what? Probably cut their rates potentially. That's the speculation. But we're taking advantage of what we have in history in time. Since 2016, they had a negative interest rate. I want everybody to go back to 2016 on the monthly chart. Look at where the yen futures were and look at where all the yen crosses were in 2016 to 2024 now. Tell me what you see. Let's go on to GJ. Large. Running up. Taking out what? Trying to reach for buy side liquidity. Bullish. Let's look at UJ. Large move. We talked about that in the chat. We were able to find a buying opportunity during Asian session. Even though the Asian session model was a failure last night, I was able to find a opportunity to go long. And we talked about that in the chat. And I think what else we have? Swiss J. See if it finally turned around. There we go. See? Finally turned around. After a down candle, price turned around. Right? Running fast, taking out previous daily high. Took out 2 previous daily highs in one candle. That's significant. So when I see signs like this, when one candle is taking out 2 previous daily highs or 2 previous daily lows, I know that's institutional sponsorship. That's one key sign. Besides the PD arrays itself, right? A large candle, a fair value gap, a gap up, a volume imbalance, a breaker, mitigation block, etc. All those order block theories, those are signs of institutional sponsorship. This one here, in my idea, right, in my experience, when I see price in one day take out 2 previous daily candles, highs, I know that that's the market maker stepping into here and pushing this up. It's not me and all the rest of the retail community buying Swiss J. Impossible. Because if we all click buy at the same time, this market would do nothing. Absolutely nothing. So we know it's someone with deeper pockets moving this price action up to take out 2 previous daily highs. It could even ran for 3 if it really wanted to today. And it could still. But we could see how false break price is coming up. Even down here, right? All of this too. Like this is a false break. This whole thing rated all these clean lows here just to run back up to buy side. So we're taking out previous daily lows, and then all of a sudden price comes up. And for those that know, this is what? A Larry Williams smash day candle. That is hilarious. This is just a little bonus here. Now I'm going a little further into this daily update, but this is a smash day candle because the candle closes below several lows. And if you read Larry Williams' book, it closes below several lows. So it looks bearish. The close is outside of the range, outside of lows. It closes all the way down here. So it looks bearish by retailers' point of view and their psyche. When they look at this chart and you put this in front of a retail trader, they instantly will tell you, oh, that's bearish. Or they'll tell you it looks bearish. And that's exactly how you know that the market makers most likely convinced most of the population, retail traders, right, retail speculators, to go short. And at any moment, they can turn it around on a dime. And there it is, phew, quickly. Catches everybody off guard. Larry Williams will tell you to buy at the high here. Or you could even buy at the open if you wanted a closer entry lower. But you can see again that ideology of buying after down candles does prove itself here again, time and time again. If the market's going to trend higher, and if you expect something to be a false break, wait for a down candle and buy after it. That doesn't mean you're going to get the winner right after it at times. Just risk properly and manage your risk. If you take a loser, you take a loser. But if you get another down day, that's another opportunity. We're all in this market to gain opportunities. We're seeking opportunities. Not every opportunity is going to be successful. I lose trades as well. I'm not perfect. I'm not the richest trader in the world. I'm not the largest funded prop firm trader in the world. I'm not. But as we continue to go along our journey, we will get better. We would understand risk better. We would understand how the market truly operates. Leave the indicators alone. Peace.